Hi, sir. We are live now.
Yeah, I'm ready.
Yeah, we are live.
Hello, everyone. Good afternoon. My name is Patrick Kishore. Uh, I am from VIVIFI India Finance Private Limited, a digital NBFC, digital only. So this afternoon, when I was given the slot from 1:30 to 2, I found it a little strange because this is usually the lunchtime for most of the conferences in this world. But then realizing that we are all on a virtual conference, any time is lunchtime and any time is tea time. So I think the organizations are making good use of their time slots. So here we go. We are going to look into the fintech industry in India, where we are now, how we got here, and where we're going. Okay. Now, what happened so far? The banking industry has been one of the first civilian adopters of technology. Once the computers came out of the defense and the scientific research area, banks were almost the first people who had the need and, of course, the money to invest in technology. So the very first things that they did was buy mainframes. They were the only ones available, of course, at that time, which were used mainly for back office work. And so that went on till the advent of the PCs. And when PCs came, the banks again moved to a PC based client server models and used them mainly for branch office and the back end accounting functions. Very small applications, but all these things initiatives were mainly to reduce costs and to avoid the drudgery of that, the manual work. Believe me, I have been through that. And then from the 21st century onwards, we had this great new technologies coming up, the web technologies, the the three-tier architecture, and of course the core banking systems, which enabled the new delivery channels like ATMs and online banking and mobile banking and what have you. So for the first time, technology has been used with a customer for customer convenience. So customer is at the center of this entire technology absorption, which gave us to the customer the convenience of doing banking transactions through alternate channels, and for the bank itself a system for centralized accounting. So this is how the absorption of technology in the banking happened. And one of the first things that was affected beyond the the counter based transaction was the payment systems. So again, the first step was done by the Reserve Bank of India, setting up the Indian financial network, what we call the Infinet. This is the backbone for all banks to communicate with each other and with Reserve Bank of India. Okay, once this was set up, again, this was set up sometime 2000, 2001, and then that also evolved from satellite-based communication to lease lines, now MPLS, and so on. But on this communication network, the first product to roll out was the NEFT, which, as you know, is data bank payment system. This is batch mode. Every half an hour, the settlement takes place, but it is available to the customers 24 by 7. Then they started RTGS, a real time interbank settlement system. Now it's available for 8.5 hours, Monday to Saturday, and the funds are settled in less than 15 seconds. The current version, that what they call the next gen RTGS, you can get your money in 3 seconds. This is something that is unique in the whole world, I believe. And this network subsequently led to the setting up of the, after the Payment Systems Act was passed, setting up of a payments council and the establishment of NPCI. And the first product that NPCI rolled out was the national switch. As you remember, earlier banks had each one had bank their own switches, and some banks had some bilateral arrangements with other banks. But this national switch uh, became a switch of switches, and therefore any bank, any card, any ATM became possible for the customer. All right. Then when the other thing was rolled out, especially to reach out to the customers out in the hinterland who probably did not have access to banks also, this AEPS came in, which is based on the Aadhaar authentication. And then the IMPS, this again is a roaring success, as you all know. Today, except for the commercial payments, I suppose, most of the retail payments are happening on IMPS. And that also led to the development of the UPI, the Universal Payment Interface, which has enabled not only interbank but also between wallets, amongst wallets, and in fact between all payment system service providers. So this is a very, very I will say sophisticated payment systems that we have, thanks again to technology and connectivity. So what is fintech? Fintech is basically all the technologies that the uh, banks, corporate finance, capital markets, analytics, payments, personal payments, all these people use. So it's an industry of companies that are used to enhance, automate, and improve the delivery of their financial services. India, again, because of our connectivities, requirements, as well as the ease of use that has come into the development, the absorption rate is very, very high. And during the pandemic, in fact, because of the pandemic, more and more people in the country have moved over to online payments. So this is a great thing, that one of the, you can say, one of the benefits of the pandemic, that today most of us are doing our banking transactions and our payments without actually going to a bank. So again, if you see around us, we live in a world that is converging. Technology is bringing together various facets of our life. People, they want to do things online without friction. When I say friction, normally it is a person to person friction. When you go to a bank, you don't want the counter clerk to give you dirty looks for coming into the bank, right? Similarly, when you have to make a payment to somebody, you don't want to have the trouble of soiled notes, torn notes, and so on, or no change. So that's the kind of friction that digital payments has removed. All right. And we are able to work a global economy actually sitting at home, and this is available to us 24 by 7. And this has been enabled by technology, which is in the form of communications, devices, the deployment of the cloud infrastructure, and the benefits again are coming to us in the form of higher, better analytics. We're able to use this thing for improving our user experience. All right. And again, helped by open source software, hardware, and what are called feasibles. Feasibles are actually data objects that can be converted into a physical thing. Like you all know about 3D printing, right? How do you do the 3D printing? There's a file. There's a file which, when you feed it into the 3D printer, manufactures that product as an add-on, additive manufacturing. So these are all open source again, and it has led to changes in the way we borrow money, the way we raise money, the way we organize our transactions. All right. So we live in this kind of a converged world. Now, here's a broad slide on the kind of technologies that are used by various people and how these are again changing things. The top part, if you see, these are technologies that are already being used by large banks, the enterprise-wide systems. All right. But below that, you have all these uh, uh, apps or appized banking services like payments, lending, and personal finance. Now, if you see this thing carefully, you will find that India has contributed greatly to all these things. In fact, many of the countries in the world don't have this kind of a variety of financial services through a mobile device or even on net. The timeline for the fintech evolution is basically like this. Before 2010, we took very, very initial steps of providing information, that is generating leads. One name that comes immediately to mind is Paisa Bazaar, right? So it started with that. Then the payment systems revolution came, and suddenly we saw an explosion of payment systems. What have you prepaid cards, point of sale platforms, payment gateway platforms. Earlier, if you remember, about 10 years ago, I think we had only one or two payment gateways. Today we have a number of them, right? And then with the advent of Aadhaar, we have a whole new stack in based on the Aadhaar initiative, and we are using that for the we are using that for KYC. We are using it for in the wealth business. We are using it for insurance, right? This is how we have built technologies on based on Aadhaar. We are doing eKYC, we are doing eKYC, right? And because of all these things, today we have a number of startups, we have a number of uh, small companies, big companies who are in every area of financial services. So what's driving this? First and foremost, I would say is the India Stack. See, this is a great API platform that government has developed, which is of use to every single person. All you need is an Aadhaar card, and just look at the world that the Aadhaar card opens for you in the area of financial services. And then the government is really, really pushing this digital revolution. You have very light touch regulation. In fact, no regulation for fintech as such, only for NBFCs. All right, and the government initiatives of Digital India, the NPCI Council, the some of the government payments, actually you get a discount on charges if you use a digital mode, and zero or very very low transaction charges, right? Recently the government has asked banks to reduce the MDR to zero for RuPay cards, right? And then we have new technologies like blockchain. We have an initiative of the Startup India, the government system for starting up for the startup ecosystem, right? Then the companies, actually the new startups have come up with whole new business models which are actually carving out components of the banking services and making them into standalone apps, with of course a bank at the bank or an NBFC at the back end for the financial settlement. But the customer interface, the user interface, has been appized, so you have an app for literally everything, right? And all this again is enabled by the huge biometric database of Aadhaar. This is a very large and thick slide. You will forgive me if your name is not on this, but on the left side column are all the various areas in which we have so many fintech companies: payments, investments, and personal finance management, insurance, lending marketplaces, consumer lending, SME lending, peer to peer lending, trade finance, financial inclusion, even neo banking and accounting, right? Regulation technology, fintech enablers. So this is a very, very wide canvas. And again, I must say that in our country, we have this kind of wide variety, which is, I think we have all sizes for all people. So what do fintech companies do? Let me focus on the the credit scenario. We have about 300 million people who are underserved. They don't have a credit history, and no credit history, no loan, except in the unorganized sector. It's a huge population. We also have about 100 million of new age people who are new to credit, very thin files, and who are borrowing for the first time. So these are the people that the new fintechs are trying to enlist. Then, of course, we have about 100 million customers who are already bankers of the big banks, right? Big finance companies and so on, who are well known with the long credit histories and so on. So here, if we again see from the bottom onwards, the banking costs are very, very high. The processing charges, the acquisition costs, maintenance costs are very, very high for the high street banking customers. Whereas fintech has really reduced that cost drastically so that they are able to provide a service to a customer at a much lower cost, right? So fintech helps in extending the credit accessibility to those who are uncovered, It builds personalized products to people who are new to credit, every segment. And of course, it provides the convenience of the customer doing this kind of business from his own home. Here again, we have another way of looking at this. Here we have the standard products like the small loan lending companies. We have companies who are providing a buy now, pay later kind of a thing. We have P2P platforms. And of course, we have retail loan business for consumer durables and so on. Again, these are only for example, education purpose only. Don't blame me if your name is not there. All right. Now what happens? This is where we are now. Now let's move forward. Let's look ahead. Bank will stay. No, but two words about it. Banks will stay in various forms. You will continue to have brick and mortar branches. Even today, banks are opening new branches, right? You will have online banking. You will have highly focused special purpose banks. And you will also have banks which are appized. When I say appized, I must draw your attention to an initiative of the Banking Industry Architecture Network, BIAN, is a European initiative who have found that maintaining large core banking systems is a very, very high cost. And so they said, why don't we break it up into smaller pieces so that the banks can pick and choose what fits their size, and independent developers can develop independent modules which will fit the bank's requirements. Okay, so this is at the very large applications being broken up, which fintechs have actually started from the bottom up. They have developed apps to start with instead of carving out of the core banking, but they have developed the apps ground up to meet specific needs. So this will continue. And fintech is a disruption that provides an opportunity for banks and technology firms to forge new partnerships. Today, a lot of fintechs are not directly lenders, but they provide the technology, and banks are tying up with these technology firms to make them more agile, more acceptable to customers. It also provides an opportunity for non-banks to extend the perimeter of their financial services. Earlier, this word non-banks, what RBI calls NBFCs, right? Unfortunately, the press calls them shadow banks. Nothing shady about it. They're all regulated by RBI. These NBFCs are actually taking financial services to areas where banks have not gone before. This technology, fintech, actually provides that opportunity to NBFCs. And here, everyone can join together and everyone can prosper together. What is called a cooperative system, right? Where you collaborate, you come together and still compete with each other, right? So this is what's happening on the banking side and on the NBFC side. So again, if I may quote Jack Welch, he said, if the rate of change on the outside exceeds the rate of change on the inside, the end is near. This is very applicable to all large organizations. I won't say in the banks only, but even to government for that matter. So that is why you will find that government also is using technology greatly so that they are always in step with the customer. Moving forward, today there are a whole host of retail investors and traders. These are called like Robin Hood traders. In fact, some of them call them quarantine traders. Because of the quarantine, people are at home, working from home, and they have lots of time on their hand and lots of money on hand because they don't have anything to spend it on. So a lot of people are taking to investment and trading. And these people are really looking for frictionless, presentless, and paperless experience. Imagine earlier, if you wanted to buy a stock, you had to call up your broker and he'll put through the transaction in his own sweet time. And then he'll tell you maybe 2 days later that he has bought it or sold it at a loss, right? Today, that is not there. You can do it yourself, totally paperless and entirely online. Retail payments, as I said earlier, have already gone electronic. You have even now contactless cards. You're using NFC technology. Banks are providing a cardless transaction, giving you a virtual card, which is just a number which you can use at an ATM to draw cash, right? You have mobile-based payments, you have e-wallets, and of course, you can all for regular payments, you can always give a NACH mandate, right? KYC, which was a bugbear of banks in the early days when you had to collect a whole lot of paper and everybody wanted paper, everybody wanted your PAN card. Now that has become totally presenceless and to a great extent paperless also because of Aadhaar. All right. Now, many because of these online transactions, there is a preponderance of fraud. Here again, there are technologies that are coming up, new startups who are leveraging machine learning and artificial intelligence to develop fraud prevention systems. Again, in India, we don't have them yet. What's called a neobank, which is a digital only bank. Today, some banks have already started a new avatar. To give you an example, it is Kotak Banks, I think it's called 811 or 911, 811, I think, right? A neobank avatar. Now it's easy for banks to have a totally, entirely digital bank avatar for digital only business, right? It can be a division which does only digital work, all right? But again, as I said earlier, at the back end, for real money to be exchanged or real money to be settled, you need a bank, and there is a bank settlement system, right? Now, this new technologies of blockchain and the coming up 5G technologies. Now, these are things that are opening up new opportunities. We still don't know what they are, right? And therefore, there's a lot of research going on into what are the use cases for blockchain. So far, we know about blockchain only in the context of cryptocurrencies, all right? When most of those cryptocurrencies are actually kleptocurrencies. We don't have a very good opinion about them. But 5G is a new thing altogether. What will 5G promise us? There is the IDRBT of RBI. It has a new initiative to look for the use cases for 5G. It's possible now to allot specific bandwidth to a particular bank. Just as the internet now has a for a top level domain name of dot bank, 5G also can give us an opportunity for dedicated bandwidth. All right. And as we all know, RBI is already examining setting up a central bank issued digital currency. This is an initiative in a number of currencies. The again taking a leaf from the Bitcoin and other cryptocurrencies model, which are unregulated. The central banks of a number of countries are examining issuing fiat money, but in the form of digital currency. So again, this is a totally new thing, totally novel thing. And I remember sometime in 2015, I think, the ISO, the International Standards Organization, initiated a process to define standards for digital currency. So let's see, maybe in a year or two, we may even have our own digital rupee. One small question. Uh, are you able to see the slides correctly in sync with my talk? Can someone respond?
Can you hear me, sir?
Yes, I can hear you. But
Yes, sir. The
is my
slide was
talk?
stuck at the first screen. The slide was stuck at the first screen only. We are not able to see all the slides.
Why is that? I'm advancing correctly. Let me see.
So the slide has changed now. It's visible. So we just
It's now
have
visible?
2 minutes more. Yes. We
Yeah,
just
yeah.
have
I,
two.
okay. Okay.
Yeah. Yes, sir.
Okay.
Yeah.
Okay. Then let me see. Then where was I? Yeah. So we finished this thing, right? So the challenges before the fintech companies. This is really important. Scaling up and capacity planning. See, most fintech start small. All right. I know they are leveraging the cloud, But we see even in a case like NPCI, sometimes first week of the week, last week of the month, first week of the month, we have so much traffic that sometimes settlement is delayed, right? This is something that fintechs need to address. Next is availability. See, your customers are not only in India, your customers are across the world, right? And an Indian citizen may go to US and may want to operate his bank account in India. So we need this kind of a zero downtime, global zero time downtime. Next is reliability. Dial tone, I'll just take one word. Those of you who are used to landlines, when you lifted the handphone, you could hear a dial tone and you know the call will go through, right? For a mobile phone, you don't have such a thing. This is a word that was uh, used by Scott McAnally when he said that you need what is called a web tone. As when you switch on your system, it should be automatically connected to the web. We have something like it, but we still need more reliability. All right. Privacy and confidentiality of customer data and the misuse of data. This is something that's a big risk in future, right? Fraud detection and fraud prevention. There are lots of new threats that are coming out, and we have a whole gang of people in Jamtara who are only waiting for new technologies to exploit. So this is something that we need to take care of. Now, two things I want to focus on: grievance redressal. Today, grievance redressal is post facto. After something happens, a customer complains, then we move. All right. We need to develop systems that prevent a grievance. Right. We also need, I think, not merely a fair practices code, but a legally mandated ethical practices such as the Truth in Lending Act, which they have in the US. There should be no false claims, especially about charges and about the recovery procedures, right? So I believe that there is a need for this kind of an act in India also. Now, regulatory oversight. Today, RBI has already initiated a review of all the regulations of NBFCs in various assets, right? But that is from a business and the company regulation side. There's also a working group which is working on digital lending, including lending through online platforms which are not regulated by RBI. So most of the fintechs have a tie-up with an NBFC or a bank. Now they want to see how they can regulate that front end also, right? Therefore, it is necessary for all the regulated entities to have a kind of a reporting mechanism where not only the financial data, but also technology and customer experience data also is reported. And it's an easy matter for RBI to get automated data flow just as they are doing it already for banks. All right. In the budget, the government has proposed setting up a world-class fintech at Gift City. I hope it will not remain a real estate venture. Similarly, there is a 1,500 crores as incentive for digital payments to boost the infrastructure and the cashless economy. I hope some of it will go to subsidize the MDR because banks are finding it difficult to issue RuPay cards with zero MDR because see, everyone has to make money at the end finally, right? And of course, the FDI and DFI, these three other things really don't apply to us. So this is how the budget is going to influence us. Finally, I leave you with this thought. Fintech is presently covers all the activities of RBI, SEBI, IRDA, GST Council, and a host of citizen to government services. Is there a regulatory overlap? Do we need a regulator only for fintech? If so, what will he in fintech? Coincidentally, the corporate activities are also regulated by MCA, right? The big risk we have is the big tech companies, the GAFA companies. They're too big to fail, and you can't really hold them to account. They're too big to jail also, right? So how do we deal with these people? Because they are supranational. They don't comply with any one single country's law. Second thing, the regulator frequently talks about systemic risk, but is the systemic risk only for the financial collapse, only for the financial system, or what about the societal impacts? Recently, we had a lot of suicides because of unethical practices practiced by unlicensed lenders, right? So, do we need a regulator to look into these things also? So, these are the questions that we need to leave. Thank you very much. I think I've overshot my time, but if there are any questions,